So the whipsaw effect within the crypto and stock markets is continuing, right? One day it's up, the next day it's down hard, the next day it's up, and then it's back down, right? So watch today's show if you want to avoid getting trapped within the current market conditions. We rejected exactly where I showed on yesterday's show. There's a lot that we need to discuss in today's show. Smash the like button, hit the bell notification, and subscribe to the channel. And if we look at the weekly chart for the stock market, well, it's pretty bleak, right? Still pretty much sitting where we were in the beginning of the week, which was when everybody was calling, of course, for the Black Monday of the stock market, right? So it has put in a little bit of a bounce, but most of these stocks, if you isolate them individually, are coming back down towards some of those prior levels where they were earlier this week, right? McDonald's should be going up because many people are going to be working there, I think, very soon, right? If we look at the crypto market over here, also mixed signals on the weekly. Most of the coins down, just a select few in terms of fundamentally strong ones, hype on the up. The rest are highly speculative. FARTCOIN up a lot with putting in a relief rally first, right? So a lot to look at. I think this is a great question, right? Given that things are changing quite quickly in the market over here from 𝗪𝗧 letter. The real question remains, who is going to give up first within these markets? Is it going to be Trump, China, or the bond market? Because the bond market is rising. Gold is also spiking to new all-time highs, and something is going to break, right? When gold moves up like that, it is a signal that people are going fully risk off. If you look over, hundreds of years, that's always been the ultimate flight to safety. As much as crypto bros want to tell you that Bitcoin is digital gold 2.0, the reality is that crypto is just a risk asset, right? And it trades like one. Eventually that might decouple, but it's not going to be yet, right? Absolutely not going to be yet. So if we look at the stock market over here, this is your picture. Yes, you found a major bottom over there, but will that hold? I don't know yet. Or will we fall through one more time? At the end of the day, all you want to do is take your positions at the extremities. A, either you reclaim the key level, or B, you sweep the lows, and then you'd be looking for some sort of a knife catch opportunity over there. Right now, you are in the middle of no man's land, chopping about, and that is the current picture of the stock market. And it's going to look the same on most of them. That's the S&P 500 rejected from the 50% level. You also have over here, of course, Nasdaq pretty much rejecting from the 50% level. You have the 200-day moving average, which is rolling over. You have the Dow Jones, and it all looks the same, right? Really got a lot of key levels to reclaim. You do have a little bit of a gap over there in the pink box, but it meets up with the downsloping 200 moving average. Therefore, even if you spike into there, you're probably going to come down one more time. Whether it leads into new lows like that, or if it just spikes up, finds a bit of a higher low over there later on, we'll find out in due course, right? There's no rush over here, no rush at all. NVIDIA, let's have a look at that. Same story, right? 200-day moving average coming in at the 50% level of the range, which is going to be a resistance level. If we look at Tesla, underneath the 200-day moving average. However, this one on a weekly scale, you have seen the RSI come back down to some pretty key levels, right? So we can highlight that. Let's quickly pull that up for you and show you exactly what I mean, right? Every major bottom on Tesla has actually been found by bouncing off of this trend line on the RSI. So I find this one to be a bit of an interesting one, right? You can see holding the 200-week moving average, and all of those buys, you temporarily lost it, then reclaimed, and it did lead into a sizable bounce, right? So maybe put in a bit of a relief rally over here on Tesla. It could be one of the first ones out the gate over there. If we look at the CPI data, it came out yesterday. Of course, CPI, or inflation, is coming down ever so slightly, which means there's an increased probability that the Fed will continue to cut interest rates, which is exactly what Trump wants them to do, right? So PPI comes out later today, and that's oftentimes the true measure of inflation that they're looking at, right? Bitcoin, we have had one of the lowest 5-day closes. Well, not one of, this was the lowest 5-day close of this entire year, taken from January, which when Trump came in on inauguration, pretty much marked the exact top, and it's been down ever since, right? So still same story over here. You're really looking to buy at the inflection point. The inflection point is your strong horizontal that matches up with a nice diagonal over there. Or you're waiting to reclaim some key levels higher. this still continues to remain in the middle of no man's land when it comes to a 5-day time frame, and the moving averages are starting to more aggressively tilt towards the downside, and that's going to add additional pressure to the bulls in order to get back above those levels. Very quickly on the daily time frame, using the volume profile, we're still below that. You can see price finding resistance over there, still respecting the downsloping trend line, and the big level to reclaim. We should change the color to make it stand out like a sore thumb. Let's make it orange, and let's make it 4 points, right? That's the level to reclaim. If bulls somehow magically, which crazier things have happened before, if they somehow magically reclaim this level by the end of the week, then the hopium remains alive, and there is a chance of redemption from the bulls, right? We know we're coming into a bull moon as well at the end of the week, so you never know. Let's see what happens over there. Otherwise, again, still pay attention towards those low levels at the fair value gap at $72,000. We're seeing that the 24-hour liquidations are reducing. What was once $1 billion, then 600 million, then 500 million, then 400 million. We're now coming back down into the sideways choppy market following big moves, and we're now sitting at 300 million, and you can see the majority of the liquidations came from the long side, right? Because of course everybody aped into the Trump pump once again, and it got faded once again. In some cases, like on Ethereum, you pretty much fully retrace the entirety of the move, right? Maybe I should just mention Ethereum while we add it over here, but Ethereum and Nokia are trading very, very similar, right? I found that to be a pretty interesting tweet. Remember Nokia, they should have just stuck with the 3310. Had they done that, I'm sure that this chart would have looked more like Apple. But instead, they wanted to get clever and move into flip phones. And now Ethereum is looking very, very similar from a fractal standpoint. So anyway, let's see. Let's continue on over here. So that's Bitcoin over there. That is the liquidation levels. Volume on the 7-day exchange basis is moving towards the upside. One positive sign, but if you were to, I unfortunately can't do this on this chart here right now, I'd have to take a screenshot of it. But if you were to draw a diagonal, you can see over here, that is also going to be similar to the price action, right? Coming into a lower high over there. So this is going to be really, really telling if the 7-day daily exchange volume can start to take out this high over here, which means it needs to get above, let's call it 80 billion, right? If it can get to 80 billion, it will start to shift the structure, right? Then maybe we have something to work with. So your bullish hopium case, if you want to be sitting there and praying, to the bullish gods, what you want to see is you want to see from the bull case a reclaim of this level, get back above $89,000, and you want to see this break above 80 billion on the daily exchange volume. That will simultaneously showcase that structure is beginning to shift, at which point I would expect a breakdown in the USDT dominance and a break of structure over here on your daily time frame, and reclaiming back above that death cross, calling this all a trap scenario, right? A bear trap, right? Shaking players out at the worst possible time. I don't think that's the case. I must say, I'm of course siding with the trend over here, which is lower lows and lower highs, and I view this as absolutely very, very, very strong resistance, which still comes back to the points that we've been putting in the whole week. Is you need to reclaim that Wednesday high, right? If you can reclaim and break above this Wednesday high, something like this, right? Hold, and that volume comes in, that will start to look really, really good. Simultaneously, I would then expect a break of this RSI trend line. You can see the RSI trend line, which has been governing price down. You might see that RSI then break out. As soon as we start to see this, we can start to step in again as bulls, and we can start to trade price higher up. Until then, we have to expect that it's going to continue to work like the trend line was designed to be, which is rejecting things down continuously. And if we look at the weekly as well, on this RSI, we just have to make slight adjustments over here. Well, you can see we also want this RSI on the weekly to break out, right? Maybe let's change the color to differentiate between the two lines. We'll make that one yellow. Well, it's going to get confusing. Let's put it in orange, right? There we go. We'll put it in orange, right? So you want to see the weekly actually break this as well. If the weekly can start to break this trend line over here, then we know we position to possibly put in some greater moves, right? So it has touched quite a few times. 1, 2, 3. If we can get above this, right, we need a full weekly close above that level, at which point, again, the expectation would be you'd break this downtrend, you would reclaim the key levels over here, and then you start to break back into trend and create the opportunity for at least a decent relief rally, right? And then we can reevaluate off of that decent relief rally. Do we put in a lower high on a higher time frame basis, which would look something like this? Do we do something like this? Put in a lower high and reject and come back down harder into a bearish market? Or, was that the low? And do we just continue the bull run and smash through and start to target the top side of this trend line, which would put you into the $120,000 to $130,000 region, right? I think that's where all the action is going to happen. The action is going to be determined in this zone. I do eventually think you trade back into the zone, by the way, which is between that $95,000 and $100,000 region. So, if you, of course, are bidding in this region, you still have the risk. It becomes a 1-to-1 ratio at that point, right? If you're bidding in this region, it becomes a 1-to-1 ratio. Why? Because that's pretty much what could happen, right? You're buying right in the middle. You could still drop down to $66,000, but you could also put in a high low over here and rally up to set in possibly a lower high in that region, right? And that's why probability-wise, I'd prefer to wait for just a little bit lower over there. Okay, so cool. We're covering that over there. What's most important is to understand how to calculate your risk, right? Something called the drawdown death trap that I covered in the Whale Crypto School course over here. So if you go into the Whale School course and you click here on risk management, then what you want to do is you want to go through to this, understanding the drawdown death trap, right? And if you go through this lesson over here, let's just quickly see it. There we go. And you go through this lesson that I gave over here, you'll know that risk management is the most important thing when it comes to your trading, because the further drawdown you experience, the more difficult it becomes to the more difficult it becomes to get back to break even, right? These are the percentage gains that are required to get back to break even. Remember, if you lose 50% of your account, you now need a 100% profitable trade. You need a 100% move just to get back to zero, right? To where you previously were. Not even making money, right? If you start to lose 85, 90%, look at this. Look at how rapidly it jumps, right? Now you need 900%. What if you lose just 5% more, from 90% down to 95% down? Just a 5% difference results in a 1,000% additional gain required. You now need 1,900% just to get back to where you previously were. I really encourage you all to do Whale School. If you haven't already done Whale School, these are all the lessons over here, right? This is the platform. There's a link in the description. All you have to do is go through over here, click on Whale School, and sign up, right? Use one of the exchange links below, which will qualify you for the entry. We begin in 17 days, right? So that's ultimately what you're looking at. The trend is your friend until the end of the trend, and until those trends break towards the upside, you continuously will experience further and further drawdown. And this is the reason that I chose to be a trend trader, right? Ultimately, that's what it comes down to. So you can see ever since over here, at $100,000, you started to break structure towards the downside. And that's where that downtrend began. And you've just been drawing down further and further and further. And now you're coming back into the resistance zone where you can see rejected. So theoretically, by definition, the expectation should be that even if you do spike up into here one more time, you're probably just going to continue to reject towards the downside, because that is the way that a trend ultimately works. So that's your 4-hour time frame. You're currently finding resistance over here. Yes, we put in a little bit of a move up on the Trump pump. You faded most of that move. And then theoretically, you've come into a fair value gap. We'll look at that in a moment, which does create the possibility, of course, in the short term for a bit of a short squeeze, right? Because you can see the liquidity is greater above than below, which means that if there isn't that much volume within the market, right? If you look at the 24-hour liquidations, then they're becoming less and less, and there's not much volume in the market, then it means that market makers will technically target the side where the liquidity is the greatest, and the side where the liquidity is the greatest is the upside right now, 83,640, which means you could see a spike up to like $84,000 just above that, and that could actually still be a bull trap, right? So keep an eye out on that, right? We can look over here at the Velo charts. It's pretty flat, not much going on over here. I think that some of the longs got squeezed out of that trade. This is literally the spike up over here where everyone FOMO'd in on the Trump pump. And you can see pretty much giving up the majority of those gains. I'm actually curious to see ETH. Let's quickly see ETH USDT on, we'll look at this one on Binance. How does this one look? Because this one pretty much gave up all the gains. Look at that. This one's horrific, right? This is your Trump pump. Price comes up over here. There it is. That candle, Trump pump. Everyone goes long, open interest spikes over here, and immediately you smack it back down, and you pretty much took out that entire move. and now they have gone negative on the funding, which shows you that they're short. So of course, look out for possible short squeeze on Ethereum as well, right? That's a real possibility. Jump into the Whale Room Discord, as well as follow us on Twitter if you haven't already. Guys, we are doing giveaways here all the time, right? So you can get free memberships. If you look and you scroll through, this is kind of how it comes out. Let me find it over here. There we go. This is the type of tweet that you're going to see. Good night. Here's an easy one. 312123. Free giveaway. All you have to do is go through to the WAP page, put that number in, and pretty much you're in for free, right? Easy. And we do these giveaways sporadically. You have to be following the page and keeping an eye out on it if you do want to win, right? So go follow the Whale Room Twitter account, Whale Room Trades, and it's got the blue tick. That's the important part. A lot of traders doing very, very well over there, making their daily bread. All right, ETH BTC. Let's talk ETH BTC, right? It's got about 15% downside still before it sweeps the lows, and this is unreal. September, you back down to September 2019 levels, right? Once you sweep that level, both September and December 2019, you'll be approaching that level again. My expectation is, to be honest, you're probably going to sweep it. You're probably going to do something like this, and then we'll see what the reclaim looks like. If there is a reclaim, that becomes a long trade. Stops go below, entry on the reclaim, and then you start to target back towards some of these other liquidity areas, which means longing Ethereum against Bitcoin over here, could provide some much needed relief and some opportunity, right? And the interesting thing is, in order for this to play out, you would expect that the market would have to squeeze towards the upside. So the reason that I mentioned this is because I think you have to be really careful with shorting the market right now. If you're trying to short the market on a swing short basis, swing short meaning you're holding positions for days, weeks, or even months, it's probably not a good idea. If you've been short from near the highs on any of the coins, you probably want to look to cover some of those short trades and take some profits, because this chart does tell you that there is going to be some sort of a deviation, right? But if you look at the timing aspect and we say we continue to squeeze down into May, then, and we draw this trajectory out, I mean, you can see that squeeze might only actually come in the third quarter, right? Somewhere around September, give or take. So just prepare mentally. At some point in this year, there is going to be a massive squeeze towards the upside, right? Definitely going to be a big squeeze towards the upside. And this is a great chart, right? Big range over there, sweeps the highs, and now it's probably going to sweep the lows. Everyone, including myself, I must be honest with you, I honestly did not think that ETH would come down this far. I didn't. No ways. I thought that ETH realistically would find support over here. Maybe let's use a box. I was looking at these fair value gaps all the way through, and then I thought, kind of like that level would hold, right? Especially on this wick over here. Look at that wick over there. I think this caught many, many, many people off guard. Look at that wick over there. I thought that would probably reverse price, but there's nothing heavier in this world than Ethereum, right? Not even a black hole. Not even a black hole holds more mass than Ethereum against BTC. It's been brutal. Anyways, let's have a look at the charts over here. We can look at some of the altcoins. Please let me know, if you do have any requests, any altcoin requests over there. I see Impact says, you're wrong, bro. Time to flip bullish. Again, what did I just say? I literally just said I wouldn't short into support. Remember that the trend is your friend until the end. We can flip bullish as soon as you break structure, right? And I don't disagree with you. I think that there is an opportunity over here for things to, you have a bit of a swing failure pattern. If you look at this monthly level, the monthly low, swing failure pattern, reclaim, there is, of course, a possibility for squeeze that could come all the way up here to about $95,000, $96,000 and then still reject, set in a lower high, and then continue towards the downside, right? So one step at a time, we're trading at level to level. And I did speak about this yesterday as well in the Whale Room Discord, specifically focusing on the 50% levels of the trading range and whether those actually hold. So we can have a look at that. Let's just quickly pull up the fib retracement. If you look at the overall trading range over here, and we'll mark this out, let's put on the 50% level and the golden pocket. You can see you swept that 50% level, and then you immediately started to reclaim. So you didn't gain acceptance below, right? So theoretically, that did open up a short-term long trade. Stop loss goes below over there. Entry goes on the reclaim over there. And then you could trade this some profits back into the order block that led to the downward move. You might find some resistance over there at 81.2. But if you can see this start to break through this level, right? If you can breach through this 83K level, the long trade is on. If you took it from down here, it's on. If not, you probably get another throwback into this region, giving you another high low, right? Low, and then you have high low, and then you probably have another high low, and then you can trade this to the previous month's mid-range, which is going to be at about 85, 86K, right? So there is always in the short term those trade opportunities. You take it level to level. There's trades all over the place. It all depends on the time frame that you're specifically focusing on. So let's have a look at Solana. In terms of its ranges, let's quickly also mark that out. We'll have a look at the overall trading range from the low to the high. So there it is, from the low to the high there. And you can see that one held exactly at the 50% level. It almost fully engulfed this candle over here, but it did meet exactly to the tick on the 50% level of this broader range. And price started to move up, right? So let's see if it can break and hold above 120. I think the weekend will be very, very interesting. Let's have a look at the same thing, but on 𝗬𝗎. We'll go through a couple of these coins, right? Excuse all the lines. The lines are just, the indicator that is ultimately showcasing the Monday high and Monday low. So let's have a look at this one over here. There it is. This one missed the 50% level, got a little bit front run over there. Didn't hit the 50% level. Hype has obviously been doing very, very, very well. This has been one of the strongest coins that are out there. So putting in its relief rally first, right? How high could this go? Well, I would definitely, if you're in a long trade on this, 100% take profit at 1660, right? 1660 is the level to watch. Let's have a look quickly at Sonic. How's Sonic done? I think Sonic also actually held up pretty well. This might be one, if the rest of the market's bias is in the short term, that it's going to squeeze up. This would actually provide probably a little bit of an earlier entry because it hasn't run yet and it's still maintaining that Monday high. So holding up relative strength in the fact that it didn't hit the 50% level. If the long side is going to actually play out on something like this, stops below those lows, it's maintaining the Monday high. You could probably get a little bit of a tighter entry on some of these low time frames. Keep an eye out on this one over here. If it is going to move with the rest of the market, that's only just narrowly holding above the Monday high over there. Okay, what else have we got? Let's see. Anything else interesting? Maybe XRP. Let's have a look at XRP over here. Let's mark out some of the levels as well. Clean this up a bit. And let's grab our tool. All right, so fib from the low to the high of the range. Also front ran that 50% level, right? Didn't even get close to that 50% level. So I guess, pay attention to the charts. A lot of these charts had this big, let me just clean that up. That's the wrong one. A lot of these charts had this big fair value gap here, right? There it was. If you look at the 4-hour fair value gap, price came into that fair value gap, into more or less the mid-level. Some of them surpass that mid-level, but you generally want to mark out the equilibrium, right? So you go through, you mark out a midline. There it is. There's your midline, little purple, held the midline, build your longs off there, stops go over here, and then you target back towards those highs, right? $2.15. Okay, cool. So that's ultimately what you're looking at, right? In the short term. Let's see, what else? What else, guys? Let me know in the comments. I'm checking. We can have a look at FARTCOIN. It's run so much. I just don't know if you're going to find anything on this, but let's have a look. FARTCOIN, 15% up. I mean, that's massive, right? Now it's approaching yearly open. This is kind of the zone where I'd start to look for, weakness, if anything. Okay, so, if it can hold above the yearly open, then I'll target back up towards about 148. We did speak about this yesterday, though. I literally covered FARTCOIN, and I actually said over here, watch for the pullback into the inefficiency candle. If it does manage to hold more or less at the equilibrium, you can trade this towards the yearly open. So there has been trade opportunities over there, right? That's a 38% move. That's huge. There is trade opportunities. This is one that's bucking the trend. Theoretically, this is in a low time frame uptrend. All right, virtuals. Let's actually have a look at virtuals because this one got absolutely annihilated. Is there anything there? What's happening on virtuals? Okay, so virtuals, also same thing. Lost all of these key levels, pretty much gave up the full pump yesterday, fully retraced the entire Trump pump candle. big level to reclaim on virtuals is going to be over here. Here's your order block that led to the original breakdown, and that's the zone that you want to reclaim. Okay. So I don't really see any trade opportunity over here. I wouldn't take anything until it's either going to be a short from here back down to mid-range, or it's a reclaim of this level. So it's either this, run up, rejection, swing failure pattern, you trade it back down to here and maybe even here, or alternatively, you're waiting for the reclaim, hold the previous month's low and the Monday high, and then you can start to target some of these high levels. All right. Trump coin. Trump, let's see over here. I haven't looked at this one on TradingView for quite some time. Let's pull it up. Really not much going on this. Overall, this is a powerful downtrend. It's just lower lows and lower highs. So usually what you want to do is you want to, buy the dip and sell the rip is the saying, right? Buy the dip and sell the rip. So where are you going to sell the rip? Well, you have an untested fair value gap over here that actually you have tested. You've already filled it, but there's multiple fair value gaps. You can see over here, actually, every single one of them is filled. Look at this. So just keep looking for that. If you see these fair value gaps popping up, look at this. I'll mark it out over here. Let's put on our drawing tool. So have a look at this. There it is, right? Fair value gap over there. And it got filled over here. Okay, have a look at that. There we go, filled. Short side. Can put another one over here. Fair value gap over here. There you go. Wick low, filled into the previous month's low, ran it towards the downside. Fair value gap over here. There you go, filled and towards the downside, and just keeps doing that. So you need to be a little bit more patient for the next one. This one, that was the last short. Maybe you can get the shorts in again, right? Price is busy moving up towards that. Keep your invalidation over here. Let's quickly mark that out. So I'd probably keep my invalidation just above that candle over there. So on Trump coin, any little spikes into here, this was a perfect trade, right? Why? Because you had the Monday range that was developed, Monday low, Monday high, price came down, up into the fair value gap over there, swept the Monday high, so deviated. That triggered the short trade, right? So short trade taken, stop loss above here. You target it down to this level, and you're still looking for follow through to sweep the Monday low and maybe continue, just like these ones did. Same as these ones, right? Entry over here, stop loss over here, and pretty much you're targeting to the range low and possibly even lower. And then you did the same thing each time, right? Cool. All right. What else? What else, guys? Let's clean that up a little bit. All right. We'll leave the fair value gaps on for next time to see how that did. If you do want to take these trades and you're a whale, by the way, there is an opportunity for the whales out there. If you deposit $50,000 on WEEX, they're giving you a $5,000 bonus, which you can use to trade with, right? So if you do want to take some trades, there is some opportunities. Use the link in the description below over there. By the way, you need to use any one of these links, right? Any one of these links over here will generate your user ID. And then when you come through to join Whale School, once you get in, they're going to ask you for a user ID. That's your passcode. And ultimately, then you're in, right? That's it. That's how it's free. Otherwise, you end up paying $2,000. If you don't want to do that, you can pay $2,000. It's gate kept over there. All right. Cool, guys. Please smash the like button as well. It really helps to get the show content out. We can do more requests as well tomorrow. We definitely can. Let's have a look. We'll have a look at a couple more. I see 𝗪𝗲𝗎. I see 𝗪𝗲𝗎. Let's have a look. We'll go to 𝗪𝗲𝗎 first. 𝗪𝗲𝗎 USDT. Why is it not coming up? Let's try that again. 𝗪𝗲𝗎. There we go. USDT. And let's pull this one up on Binance. Okay, so 𝗪𝗲𝗎 putting in a bit of a squeeze already. Biggest resistance level would be over here. This would be the biggest resistance level. That is going to be a massive underside retest into the previous month's mid-range. And you should be looking to short sell that, basically. Price moving up into this zone over here. Previous month's mid, I would want to take full profits at about 0.015 and then probably look to short sell it back down to at least the bottom of the trading range. Okay, and the other one was 𝗪𝗲𝗄. 𝗪𝗲𝗄. Let's have a look at 𝗪𝗲𝗄. All right. Okay, so it hasn't put in its squeeze yet. If it does, higher time frame, and you're looking comparatively to what we just discussed on Jasmy, this would be the level, right? Big level to reclaim. Structure begins to shift on C-pool on the 4 hour at least. This is, we're just looking at the 4 hour for now. If it can get above that, right? But even look at that 4 hour. This is brutal, right? Just a straight downtrend. So typically what happens is you get a trap scenario, right? It's very rare that you just V-shape recover. When you see the chart that looks like this, you know, and it's just down only, typically what happens is you can see you'll form a bit of a trading range, right? So price comes up, rejects, price comes down. You might set in a trap like that where it makes everyone think it's going to break out and do this. But ultimately what's most likely to happen is this. Okay, so by definition, most of these coins have already gone through a bear market. It's pretty unreal because you have to look at these coins, right? From their highs to their lows. I mean, that's bear market kind of stuff, 85% move. Very deep drawdowns over here. All right, guys, that's it from me. Let's cut over there. We'll have a short show today. Please smash the like button, hit the bell notification, and then also jump into the Whale Room Twitter account, free alpha over there, and you can get a free membership to Whale Room if you want. So I'll see you all on the next one, which is tomorrow, same place, same time. Have a great day, and I'll catch you then. Cheers for now.